Hello, welcome back. This is Seewing Yi, and today I'm going to go over another Redfin article dated today as the date of this recording, May the 22nd, 2023. And the title and headline of this article is by Redfin is how much are home prices rising or falling? The answer depends more on location than it has in over a decade. Before I begin, I just want to let you know that I've been doing real estate investing for more than 30 years. I've purchased cash flow rental properties at more than 10 locations in the US. In the 2 decades ago, I purchased properties, entry level rental homes in the Western region, Nevada, Las Vegas. I purchased in Phoenix. I purchased in those areas and also in Texas and South Carolina and many other locations. So things have changed, and at the same time, things remain the same. Anyway, I would say I'm pretty confident in some of the things I'm going to say and some of the information on this article. I have some very strong personal opinions on it. Again, it's all how you can interpret this kind of data, what kind of actual experience someone has, and then take it for whatever it is. Whenever I go over a particular article for my video presentation, it's just if I see something that are inaccurate or misleading or overhyped, then of course I will talk about it and give it my own perspective. And you, as a person out there trying to learn, and you take it for whatever it's worth, and hopefully you'll learn something, and so you can make an informed decision as a primary home buyer with what do you want to buy, whatever location, wherever you live. And if you're a real estate investor, that's good too, because this is what I do, and hopefully you can buy in the right market where the numbers makes sense. But having said that, this article, this headline by Redfin, it says depends more on location. So really, that's very obvious. Real estate is local. There's no such thing as a national real estate market. There are more than 2,000 counties in the US. There are thousands and thousands of cities. Every local area, every neighborhood, every street have their own very unique characteristics. So whether you want to buy a primary home in your particular area, just focus on the area and surround with yourself with real estate professionals that know those local market. And whether you're a real estate investor, do your research and due diligence, and would the numbers make sense, so you can obtain cash flow properties based on 25% down payment. Once again, rely on trusted professionals in the local market that has been operating in that local market for years, and they will give you the best advice and not go through various YouTube channels or the mainstream media that just using clickbait videos to entice you to watch their videos, which is full of misinformation, full of very inaccurate, misleading, and they get a fat line just to entice people to subscribe to the channel so they can monetize the YouTube channel. Be careful where you get the sources. Whatever headlines you read, dive deep into the headline. If you're smart, you can detect the details of the headline to determine whether the headline is overhyped, misleading, or whatever the case may be. All right, so that's all I have to say on that. With that said, let's dive deep into this article. And the first paragraph, it says prices are falling by double digits in the Bay Area and rising by double digits in South Florida. So we're talking like 2,500 miles away geographically from the far west in California, all the way down to the other side of the country, all the way down to the southeast corner of the US, geographically speaking, in Florida. So Redfin is happy to use this to very offsetting area to make their point for this particular article. So again, prices, it says right here, prices are falling by double digits in the Bay Area and rising by double digits in South Florida, a gap that is near 30-year high. The wild pandemic era housing market make price growth trends more local than they have been since 2009. Again, prices always wide differs greatly from location to location. Doesn't happen 2,000 miles away between San Francisco and South Florida. By the way, I physically, in my primary home is located in the San Francisco Bay Area, and I lived here for more than 30 years. So I've seen this housing market. Let me say one thing. Okay, there's a three different type of markets. There are cyclical markets, which typically are in the western region, California, Boise, Idaho, Phoenix, Arizona, Las Vegas, and in Austin, Texas comes to mind. These are cyclical markets that go way up, especially during the pandemic real estate boom a couple of years ago, and they have falling at a double digit, generally speaking. Understand? So those are cyclical markets. And then there are hybrid markets. Hybrid markets are a little bit cyclical, but a little bit stable markets and with a good affordability. And this hybrid market is located in the south and southeast. Then there are tertiary market. Did I pronounce this correct? Tertiary market. Another word for tertiary, what I mean by that is these markets are very stable. They have not gone skyrocketing up in prices in the last 2 years or in any other years. They're very stable. They are very low, affordable price points, and they have no appreciation compared to the cyclical markets in the western region of the U.S. They are very stable, cookie cutter homes, and they are in the Midwest. So we're talking about three very large regions with a vastly different economic and housing metrics. Okay? Hopefully you learned something by what I just said. All right. By the way, even though I live in the Bay Area for 30-something years, I own several primary homes over the years, but all of my investment properties have purchased are in the tertiary markets in the Midwest and the hybrid markets in the South and Southeast. Because as an investor, which that's what I do within my real estate investment club, myself and I have guided thousands of mom and pop real estate investors from all over the country to buy low entry level affordable homes, good rent to value ratio with 25% down payment financing, so you can achieve positive cash flow and buy these turnkey casual properties in these good low entry level properties and invest for the long term. So that's the investment philosophy I've been preaching for several decades, and I'll continue to preach for several decades more. All right. So this article continues to say the historical price growth gap between San Francisco and Miami illustrates how local housing market remains, with the Bay Area losing home buyers and South Florida attracting them. Look, I know this article mentioned about Miami and South Florida. I think it's a little bit misstating what they're trying to say. It's not just South Florida, Miami. I'm basically to say that entire state of Florida have been going tremendously and massively because I own several properties in Florida that will continue to own for the foreseeable future. And the most is a higher percentage of our mom and pop investors who have purchased cash flow properties in Florida than other areas of the country. And that's been the past several decades. And it's not going to change anytime soon because Florida will continue to grow because it's the number one and fastest growing state in the country, Florida. Clearly is number one, and I believe Texas is number two. So Texas and Florida is a very good long-term investing for not only for investors, but for primary home buyers as well. All right, so let's continue. The big percentage gap growth gap between California, San Francisco, and South Florida is 21 percentage point difference, is near the biggest in over 3 decades. Okay, and it's the largest gap among major U.S. metros Redfin analyzed. As you can see, home prices gap hit a 13-year high during the pandemic, and so you see the big price differences based on this graph. San Francisco minus 10.1%, Miami plus 10.9%, now receiving double-digit growth price difference. However, this next paragraph it mentioned this is according to Redfin analysis of Case-Shiller Home Price Index. Look, I have some reservation about Case-Shiller Home Price Index. Okay. Oh yes, they are a very credible local organization. They've been tracking home prices for several decades. The Case-Shiller is pretty reputable, but I take it with a grain of salt in how they obtain their data because they only use the 40 most populous metros to use their Case-Shiller price index. Furthermore, their data they produce, for example, if they were to produce an updated report today, for example, their last reporting, I think, is always 4 months behind. For example, in today's May, which it is, today's May, the last date reporting from their article, from their reporting, when it come out to the general public, is 4 months ago. We're talking like what, February, March, April, yeah, February. So they are 4 months behind in the data, especially recent information that we're getting. A 4 months time lag by the Case-Shiller index makes their report very outdated. For Redfin to partner together to come up with this report on this article dated today, 22nd May. To me, like I said, I'm taking with a grain of salt on some of this data, but I just going to report what this article said, and then you will form your own judgment and opinions about some of this data. But there's some good points too, right? Yeah, see right here, Case-Shiller Home Price Index. They're referring to composite of 20 major metros area in the index. Only 20 major areas. There are way more than 20 major metros area in the US. So one more thing I forgot. Case-Shiller index, they mainly use the Western region. They obtain data from the Western region of the US to come up with their 20 metro index. So if they use the Western region, we all know in the past year, the Western region home prices went up the highest in the past 2 years, and they have fallen the most in the past 12 to 18 months since last summer. In the past, not 12 to 18 months, since the past 9-10 months. All right. Just want to get that out. You know what else I can see? Some Bay Area house hunters who have been priced out of the last few years may finally be able to break into the California market. If they can afford today's elevated mortgage rates and still high prices and find a home for sale amid the housing shortage. Meanwhile, many South Florida locals are finding it harder than ever to afford a home. Let's talk about California, or for example, San Francisco, even Southern California, LA area, or similar to San Francisco. Yes, the homes have, depending on what zip code, what neighborhood in San Francisco, prices are falling 10-15% from the peak last year, or 9 months ago. But if the peak, for example, is, let's say, 1.8 million, maybe it fell down to 1.6 million. Still, the home prices are outrageously very high. Yes, for those people that can afford to qualify with a 7% mortgage rate, yes, today is 7.01%, according to Mortgage News Daily. So the mortgage rate is quite elevated, quite a disappointment. And you still can find, because the salaries of Californians are much higher than the other part of the country, you still are able to find people that still can afford to buy a home right now. As a matter of fact, several weeks ago, my friend, the local realtor, Tony Bruno, in the Bay Area, he listed a home. I mean, his buyer are trying to compete on these homes that were listed for $999,000 in the Bay Area. And it's like 1,200 square foot. It's built in 1950. And at the end of the day, a few days after the home was listed, there were 66 offers for this cookie cutter small home in San Francisco area, in Fremont to be exact, and 66 bona fide offers. And the winning bid was a cash buyer who bid for 1.275 million. So almost $300,000 over list price was accepted. It's an all cash offer. Yeah, right now, 9 months ago, yeah, some areas in California, San Francisco, LA, whatever, home prices have decreased by 10, 13%, depending on neighborhood. And the mortgage rate at 7% instead of 3 to 5% last year. But they were still bidding wars because the level of inventory here in California is coming to a point where it's almost down to 1 month's supply of inventory. So go figure, right? So you still have a lot of, even with the high tech downturn and a number of high tech people got laid off recently. We all know that, right? But there are still very high qualified buyers here in California. So, and they're buying at a lower price, 10 to 50% lower than 9 months ago. So that could be a good situation. They buy at a lower price than 9 months ago. But then again, the mortgage rate a year ago in May, the mortgage rate is around 5.3%. Now, the mortgage rate as of today, 22nd May, is 7%. So the mortgage rate has increased like 1.7 percentage points in a mere 1 year over year, May 2022 to today, May of 2023. All right. So getting back to this article, San Francisco home prices are dropping largely because remote work has untethered many tech employees from the Bay Area, with domestic migration away from the part of the country where more than double between 2020 and 2022. As we all know, right, there has been a lot of people have left California to go to the Sunbelt market in Boise and Phoenix and in Las Vegas and in Texas and in Florida, right? They're going to because of remote work. So we've been hearing that. And so that's what we're seeing right now. And because prices are a lot cheaper in the other areas other than California. Additionally, layoffs in the technology industry and declining tech stocks, combined with high mortgage rates and home prices that are still the most expensive in the country. Yeah, California and Bay Area are still the most expensive in the country, even though there's a double-digit home price decrease in the past 9 months. So it has diminished the Bay Area pool of buyers. Yes, that's true. But the low supply of inventory in California is really coming back down to a record level. And that's why we're seeing multiple offers and bidding wars, not only in San Francisco Bay Area, but nationwide as well. So that's how it is. And okay, the fact that the Miami prices and when they say Miami is not just, like I say, not just South Florida. Yeah, South Florida home prices have increased exponentially in the past 2 years because of the demand. People want to move to Florida for many reasons and not just Miami. So therefore putting very upward pressures on increasing home prices. And Florida right now, even during this high mortgage rate environment, home prices are still going up as opposed to other areas in the western region where home prices have gone down recently, at least temporarily. Therefore, the relative popularity of Florida is here to stay. Yes, the popularity of Florida is here to stay. This means for the foreseeable future, long term, more and more people will continue to move to Florida. Job growth, population growth, weather, no state income tax, and still relatively low home affordability, but not Miami, right? Miami, you have multi-million-dollar homes, condos, very high prices where it's very hard to afford the home, not just Miami, South Florida, and along the Atlantic coast, up and down to South Florida, Fort Lauderdale, Palm Beach, and all these areas where all the Floridian locals are being pushed out of the area because of the skyrocketing rents and skyrocketing home prices. So those locals that live in Florida, not just South Florida, they've been priced out of the pandemic boom. So they are leaving Florida to go to other low cost places, other outside Florida, for example, Alabama, South Carolina, Georgia, Mississippi, wherever they're going. So that's very sad. But anyway, that's what's happening. I mean, we'll continue to see migration trends based on home affordability issues, and so many people are being priced out of home purchase as a result of the higher mortgage rate and continual housing appreciation nationwide from this year from January to year to date May 22nd is around 6 to 8% appreciation. I say it again, home prices have been increasing nationwide during this year 2023 as a result of continual pent-up demand and historical low supply of inventory. Okay? Even with the high elevated rate of 7%, which you have just seen. So this 7% mortgage rate is a psychological barrier. I don't know how else to put this. So it's gonna affect demand in the next few weeks or next few months if the mortgage rate continue to be in the high sixes, as we have seen as of this week. So not a good sign for home buyers, but then as home sellers continue to have a lock-in effect. Most home buyers, they have mortgage rate of less than 4%. There's no way they're going to trade up their house to buy an upgrade house at 7%, meaning effectively you have to pay twice the monthly mortgage from a 3% to 7%. Most homeowners, they are not selling for this very good reason, thereby exacerbating massive low inventory of supply. Does it make sense? All right. So the pandemic has given many Americans much more freedom on where they choose to live. And a lot of them are choosing places where shelling out $1.5 million in California for a run-of-the-mill home isn't the norm. That's right. A cookie cutter shack in California, run-of-the-mill shack selling for 1.5 to 2 million, and the square footage is only 12 to 1300. And the house is built 80 years ago, in the Bay Area and many parts of California as well. Yes, my primary home is in the Bay Area. So luckily I bought my home long time ago. If I would have tried to buy a home right now, I probably cannot even afford the price of today's home with the mortgage rate the way it is. That's pretty sad. That's why when I buy investment properties, it's all out-of-state investment properties at a very low cost, and I can cash flow with 20 to 25% down payment. That's the metric. That's the formula of achieving success. If you want to buy rentals, if you want to be a real estate investor, that's the numerical metrics you'll have to comply with. As I conclude this, there's a big variance. After San Francisco and Miami, the metros with the next biggest gaps are also expensive West Coast tech hubs paired with relatively affordable Sun Belt locales. Seattle to Miami also have a big variance between price growth gap. San Francisco to Tampa, Florida, similarly, and Seattle to Tampa, San Francisco to Atlanta. So you're really comparing apples to oranges, right? It's not a fair comparison, because California home prices are extremely high versus Florida home prices are lower. But having said that, Florida home prices are moving up and up. So a lot of people cannot even afford to rent in Florida or buy for that matter. Therefore, you see a lot of people migrating initially to Florida. They realize that the home prices are skyrocketing in the past few years, and they have to reroute their ways, and they are going somewhere else to live, even more affordable in other parts of the U.S., maybe the neighboring states in the lower south and southeast. As I conclude this, let me see what else. It is important to pay attention to local housing market trends. Obviously, this is local. I'm glad the Redfin has finally wise up and stop misleading people. There's no such thing as national real estate market. I've been telling people for years and years, and finally a national credible news media source like Redfin are making a mention of this particular unique market data that uses local. That's the bottom line. So the Great Recession to the global pandemic, home prices growth varies most in terms of boom and bust. Yeah, this is typical. I'm not going to go over the specifics of this remaining few paragraphs. All I can say is high demand was pushing prices in those places way up, while prices were rising more modestly in other parts of the country, like the Midwest and Northeast. Yes, Midwest and Northeast has grown stable. They have the prices have gone higher up, single digit appreciation in the past 12 months and beyond. So takeaway is this. Yeah, so wherever you're located, actually comment below where are you watching this video from, what part of the country. Tell me about your local area, what kind of real estate transactions and data going on. I'm willing to bet that the comments up here are such that, there's a lot of more market wherever you are. I believe is very robust. Demand still could be higher than supply. I will not be surprised. But go ahead and comment. Tell me what's going on with you. Are you already a primary homeowner? Are you buying your first home? What about as an investor? Are you a first-time investor, real estate investor, or mom and pop investor? If you are, tell me what are your goals, what you want to do, or you are experienced real estate investor, where you want to buy properties. Is it a good time to buy, given this volatility in the housing market? So my answer is right now is good as time to buy as any, whether you're a primary homeowner or a real estate investor. As long as you buy in the right market, for a business investor, you buy in a low, affordable market, entry-level market, where the rent will cover your debt service with 25% down payment, which is mostly in South and Southeast and the Midwest, as I said earlier. So never wrong time to buy a house, whether you buy to live or buy also to invest, because you buy long term. You buy for at least 7-10 years and beyond, buy in whole, and you can overcome any kind of volatility, recession, inflation, or mortgage rate. At the end of the day, it does not matter. You need to have a long-term buy and hold strategy, and you'll be fine. You can overcome any short-term volatility that we are seeing. And finally, do not get overwhelmed by these ongoing negative headlines and doom and gloom scenarios and crash growth videos out there. Prey to people's lack of know-how. There's a lot of misleading information in the YouTube world and any other mainstream media. Negative news sells. So be careful about what source you're trying to learn, what YouTube channel you try to subscribe to, especially those crash videos that will do nothing but scare the crap out of you, so you could remain paralyzed and not be able to pull the trigger to buy a house or a rental house for your long-term wealth-building future, right? So that's all I have to say. And hopefully you got a lot of value from this video. If you did, please smash the like button and subscribe to my YouTube channel. I really need to get more subscribers and get more views. Please invite your friends and coworkers and relatives for my channel. I try to provide great content on a weekly basis, a hot topic around the housing market, as it is today. And also I talk about real estate investing news quite often on a weekly basis as well. So please, in fact, not only subscribe to my YouTube channel, you should enter my website below and drop your email into the form to subscribe to my weekly turnkey real estate investor newsletter. Once you join our network, you'll receive weekly market updates, investment opportunities, real estate education, and interviews with top industry leaders straight to your inbox that you just won't find anywhere else. What we do is we help investors, turnkey mom and pop investors invest out of state. This is our specialty. We connect you with experienced real estate agents and experts in the hottest markets throughout the country, regardless of where you live. Helping you invest in profitable, cash flowing properties is what we do. Thank you so much for watching. This is Seewing. I will see you on the next video very shortly. Have a nice day. Bye-bye.